Welcome to the FML podcast, the podcast on a mission to uncover actionable insights, explore the latest trends, and to catalyze your fintech's growth. Join Growth Gorilla's founder and managing director, Shamir Sachdev, and some of fintech's hardest hitting marketers and leaders.
Welcome everyone to today's episode of the FML podcast. Today we're joined by Ben Morfoot, Product Director at GoCardless. Ben, thank you very much for joining me today.
Thank you.
Good stuff. Let's kind of kick off and start at the beginning. So if everyone listening today, could you share a little bit more about yourself and your journey so far?
Yeah, absolutely. So when I left university, I think like a lot of people at that point, I didn't really know what I wanted to be when I grew up. So I headed into consulting for a few years. But around that time, the London startup space was really starting to sort of bloom, and I was quite excited to get into it. So headed off and went to join a small startup, really early stage, first employee after the founders, in a bit of a generalist role, doing a whole range of different things, but gradually kind of worked my way into product, ended up leading products there, grew that to a sort of a decent size. And then when looking for the next thing, I started looking at fintech because that was a great place in London at the time and still is. And GoCardless looked like a great company. Went, met the team, was really impressed by them. And so, I thought I'd go and join there. And this is where I've been for the last 6.5 years. So done a good time.
For our audience, for anyone who quite possibly doesn't know who GoCardless are, do you want to give us a quick overview of what you guys do? And then perhaps also then we can lead in nicely into kind of your role as product director over there as well.
So GoCardless are a PSP. So we help merchants, businesses to collect payments. We do that for more than 85,000 businesses around the world. And we're focused on bank payments. So that's moving money from one bank account directly to another. The vision really is to become the world's bank payment network. So connecting up a lot of these different bank payment schemes, bank payment rails around the world into a sort of single cohesive network. That's GoCardless in a nutshell. I'm happy to talk more about bank payments, the advantages and all those kind of things. Obviously, that's our bread and butter, but that's at a high level. My role, I've been across a range of different teams in my time there, usually sort of on the what I call the surface area of the product, so the parts that face out to our merchants and to our partners and to our payers. But most recently, been leading on a new product that we launched back in February, and that product's called Embed. And it allows other companies, particularly other PSPs, other payment companies, to integrate GoCardless's bank payments into their platforms, allowing them to offer our bank payments, what we hope are best-in-class bank payments, to their customers.
Embedded finance is growing massively at the moment. What's your kind of overview of kind of where I suppose the kind of payment industry is at the moment, bearing in mind like the economic climate, that we've got, a fair few providers in the marketplace at the moment. Yeah, it'd be great to kind of hear just to kind of capture an overview of your thoughts, really.
The cliched idea is that everybody's shorter on money than they used to be, but we really find that to be true. We do a lot of research with merchants trying to understand, what it is that challenges them about their business, what they're worried about, both within their payments and outside of it. And we know that, for example, 90% of decision makers within those businesses all say that they have less money and it costs more money to run their business than it did a year ago. They've been, to some extent, passing that costs on to customers. So we've seen the prices of various services rise, both in payments and outside of it. But a lot of them are at the point, and the majority, according to our research, where they just don't want to pass those payments on to customers anymore. So we're definitely seeing a trend where they want to reduce their costs. Well, one of the ways that we're seeing this, and again, we're seeing this within fintech, but also just generally in SaaS and sort of other areas. One of the ways they want to reduce those costs is by reducing the number of suppliers. I know that, in GoCardless, we're doing that ourselves. We are looking at how we can be more sort of sensible with the way we spend money on SaaS costs and those kind of things, going, well, maybe actually we don't need services to do X and Y and Z. Maybe we can use this one service that does all of them. We can save a bit of money there. In payments, we're particularly seeing this come through as a trend in merchants looking to reduce the number of PSPs that they work with. So trying to consolidate it down, work with fewer of them, negotiate better deals, maybe at the compromise of, not going with sort of specialists in all these different areas, but just one person who can give it to, all of them in one package.
So correct me if I'm wrong, but is Embed the solution behind this trend towards wanting to consolidate suppliers?
Yeah, so the original sort of philosophy of Embed was We know that there are plenty of merchants out there who want to use a specialist, solution like GoCardless. As I mentioned earlier, we've got more than 85,000 of them around the world, and that number's still growing fast. But there are plenty of merchants for whom that doesn't make sense, and they kind of want to use, maybe a generalist PSP. They want to use a PSP that just gives them everything in one, and that's just how they prefer to run things. And we are seeing that trend just being increased by the current economic climate, where most merchants also want to reduce down the number of suppliers purely for cost reasons. So we're just sort of seeing that accelerate. So Embed sort of fits with that trend really nicely.
Can you kind of take me through the journey that GoCardless took from, I suppose, realizing that they were seeing obviously this trend in reduced volumes, and how they then established and understood that merchants were looking to consolidate, and then the process behind actually then formulating that Embed product and what that looked like?
There's probably two different things actually going on there. We've, for a long while at GoCardless, thought about the different ways that we can reach our merchants. So from the beginning, we're sort of a 12, 13-year-old company. From the beginning, we've had the direct channel where merchants can come directly to us and sign up. And actually from very early on, we've had a bit of an indirect channel through our Connect product. This is where you can have a GoCardless account. You can also have an account with another platform, say, for example, Xero, the accounting platform, and you can connect the two together so that they just work seamlessly. And the idea behind that has always been that we think payments should just go to where the merchant is. You shouldn't have to think about payments as this special other thing. As much as possible, it should just work. So we don't want to be the center of the merchant's universe. We want something else to be that, something that's better suited. Usually they're, sort of vertical specific or more sort of segment specific platforms, and then we plug into those. So we've always had this philosophy from early on, and Embed is really kind of a natural progression of that, where we go, well, we can take another step back from the merchant relationship. We can allow other PSPs, not only other SaaS platforms, but actually other PSPs, to have those merchant relationships. And we can just provide the payments, and we can focus on doing bank payments really well, and they can focus on serving the merchant directly. So that's kind of where Embed originally came from. And then this trend that we've seen, it sort of came out in some research we did, where we found that more than half of the merchants we surveyed have 3 or more PSP relationships, which really surprised us. And we found that 65% of merchants are looking to reduce the number of PSPs that they work with. And that, paired with this philosophy that we just want to make payments as easy as possible, they should come to you, just sort of reinforce the thinking behind Embed.
I'm going to switch streams a tad slightly, but kind of with the backdrop of the Embed product and the reasons behind launching it. In your role as product director, what levers are you in charge of pulling over there? And what was kind of your involvement in delivering the Embed product?
The role of product director kind of varies depending on where you are. At GoCardless, if you're looking after, say, a more mature bit of the product, it's going to be quite different if you're looking after something new. With something like Embed, it's really, you're there generally at the sort of forming of this hypothesis, and something like Embed is sort of a product strategy level hypothesis. So there's lots of people involved in that, and then your role is to, I guess, to kind of break that down, to shape it, to sort of direct it, and start to get into the details of the exact nature of the bet that we want to place. Because any strategy is a bet, right? Any strategy is saying, we've got a bit of a hypothesis based on limited information that we think this thing is going to make sense. And it's your job to dig into that and go, okay, well, where within this sort of nebulous shape should we put our focus? An example of that is one of the things we looked at quite early on is the types of payment providers that we wanted to go after first, and where we thought there was both an opportunity, but also that the solution was suitable, that we could sort of test it and get something out there within a reasonable space of time to be able to know, whether or not this was a thing worth pursuing. So what's the kind of the sensible mix of something that's quick to do, but stands a good chance of success, so we kind of validate the bet and, keep investing if it makes sense. And we were looking at, for example, there are sort of parameters you can play with, like who takes on the credit risk from the merchant, right? If they are, if they go bankrupt and leave a debt, how does that work? Or who takes on various parts of the regulatory responsibilities? And depending on the way you play with those different levers, you end up with a product that is far more complicated or far less complicated, but equally one that can have more or less value. And there are a lot of kind of pieces at play there. So a lot of the early work was in determining those kind of things to say, okay, this is where we're going to focus on initially. And actually, back in the early days of this, it was just myself. I was the only person working on it. And then I was joined by somebody on the commercial side, and then we put the product team behind it. So there's a lot of time at the beginning of just looking at those kind of things, talking to customers, but also lots of kind of work on paper to work out what does the most sensible bet look like here.
There's 2 or 3 things I'm really interested in digging into. One is about that piece around talking to customers, and is it more sort of anecdotal conversations that you're having, or you're leveraging from your customer services team, or is it a case of you're doing a lot more sort of structured market research, in-depth interviews, surveys, that sort of stuff? And then also then around something else that you mentioned was identifying kind of which sector to go after, and how you kind of approach that. So it'd be great to hear about kind of about, I suppose, both forms of market research, ultimately speaking, kind of how you kind of manage that market research process.
There's obviously a range of ways of doing this depending on if you're B2B, B2C, who you're sort of going after. Other payment providers, other PSPs and similar platforms, kind of an interesting one because they're obviously competitors of GoCardless, but also the idea of Embed is that they are, partners, customers, and we're working together. So the research you can do, the user research, is always slightly tainted by that. We've definitely had some interesting conversations doing product discovery with other PSPs where there was a lot of kind of dancing around and nobody really wants to get into too much detail. And there's definitely a kind of a nervousness around sharing too much. And that's kind of, understandable until you build those relationships a lot more strongly. That's definitely kind of an interesting factor that I've certainly not had before. For example, when doing user research with merchants, with people who are directly collecting payments using GoCardless, that's quite a different dynamic. The other thing is, relatively speaking, there aren't that many PSPs. There's actually a lot more than I thought there were back, a few years ago, back when I started looking at this. But things trying to get good quantitative data is hard. You can't put up an ad on LinkedIn or something and get sort of hundreds or thousands of responses to some research you want to do. So it's naturally a bit more qualitative. A lot is based on those one-to-one conversations, and you start to get a steer of where people are looking and where they're interested in going, and one, whether this is even something that is going to be interesting to them, and two, the sort of ways that you could build it that would be more or less useful. So yeah, a lot more of it is based on those kind of one-on-one conversations than maybe if you're looking at something with a higher number of potential companies that you're selling it to.
And then kind of moving on to that second part of that question, in terms of identifying kind of which sort of user group to go after, it'd be interesting to really hear about that and kind of how you approach that.
Yeah, so that's sort of one of those areas that's more art than science, where you can do a whole load of desk-based research, but actually you can kind of find numbers that tell you anything you want. If you sort of look hard enough, you can tell you the story for different areas to go into. I think we found that no area we were going to go into was going to be the wrong one. There was definitely demand, at least enough demand to sort of get started in any of the areas. So actually a lot of it came down to what's the sort of viable version of this that we can build that goes after the segment that we can serve most quickly. So it almost flipped to kind of being about prioritizing, in the product management terms, in the solution space rather than the product space, which is kind of interesting because that's not normally how things work. But we're looking at, okay, what's the version of this that we can actually build and is viable in a certain time frame. And a lot of that came down to the complexities of scheme compliance, legal compliance, what technically is going to be difficult. So a classic kind of product management, linking all of those different constraints together, and where is the sort of the sweet spot where you find something that's not going to be too horribly complex to build.
You mentioned about the trade-off between effectively how much risk you're going to take on and the complexity of the product, and then how that balances off against a high-value product versus a lower-value product. How did GoCardless, how did you choose to find that balance, or where you kind of ended up? And then how did that impact also the business from a revenue perspective, and also, I suppose, speed to market as well? It'd be really interesting to hear about kind of all of those dynamics to make that decision in order to get that product out in front of people as quickly as possible.
So I should first say, although Embed itself is a new product, we've had versions of this and versions of this relationship for 5 or more years with different payment companies. It's just really sort of in the last year or so that we've wrapped it up into, okay, let's we think this is strategically important. Let's go after it. Let's go after it more sort of concertedly, and let's put together, a set sort of product offering. So there was a kind of background before then that we knew that, we knew we could do this. We knew we could do it well. It's just, can we do a consolidated version of this that we can sort of make a large success in its own right? So for that consolidated effort, we set ourselves a timeline, and we said, if we, this is what we want to measure success, this is the period of time that we want it within. I think that's key when making a bet, to keep yourself honest, both as sort of a motivational tool to make sure that you're driven to throw everything you can at it to prove or disprove the hypothesis in that time, but also so that as an organization you don't end up with sort of zombie projects that sort of continue and go on. So as we looked at that time frame, it was really, we could sort of work back from there almost. You can almost go, we want the first customer. It's a bit like being an early stage startup, you've got a certain amount of runway, and you're going, this is when the runway runs out. Therefore, we'd need to, raise more funds at this point, or sort of, in GoCardless terms, we need to say like, no, we want to, this is an area we want to keep investing, keep developing. And going back from there, what sort of metrics would we have to have seen? What successes would we have to have seen? And therefore, how long do we think we've got in order to build something? And you can sort of work about that way. You come up with something that looks viable and that looks sensible, and say, okay, that's the direction we need to go. And we tweaked that a couple of times during it. And, the way we were successful wasn't quite the way we thought we were going to be successful, but we sort of proved it out. And we knew that we're not an early stage startup, so whatever happened, we're never going to sort of like just turn this product off. We've got people using it, and we're going to keep supporting it. But it's more a question of, do you keep just the same number of engineers working on it, sort of thing, or do you double down and continue pushing it and making it a much larger part of the strategy?
Again, kind of switching streams a little bit, and a lot of our audiences, or a large part of our audience, will be marketers. From your perspective, how would you describe your relationship with the marketing team, or your GoCardless' marketing team? And I think just as sort of just general advice, how can marketing support your function or similar functions within similar organizations?
I think that relationship is really strong. I think that one of the things we've tried to do with the team working on Embed is create a really tight cross-functional team. So we have people either full-time within the team, or sort of quite a lot of their time dedicated to the team, who we work with really closely, rather than having to go to an entire function, so like an entire sales function or entire marketing function. We're a lot more closely bound with certain people. And what it means is, when we're having conversations about, this is the strategy we want to pursue, or this is who we're going after, or this is even down to the level of, this is the feedback we've seen from a certain customer on the product, all of those functions are involved in those conversations. And so everybody kind of intuitively understands the same thing. So you're not, I think the sort of worst case of working with marketing, for example, is where you're working on something, bundling it up, then taking it to a marketing team to go, okay, at this point we need to go market this thing. And it's kind of already too late. You should have baked in the approach to marketing much earlier, both in the way that you think about forming the product, but also as the product is forming, you're naturally thinking about how you market it and how you talk about it. So in Embed, for example, even when we're looking at, the strategy behind it, we're already thinking, okay, how does this strategy translate to the way that we explain this to other payment providers? How does this strategy translate to the ways that we're going to sell this? And having marketing involved in those conversations, even when you're thinking about what you're going to build, I think is key. So it's not sort of, it's not novel or super clever advice. It's just, get people involved early on and make sure everybody has the context. But when you actually do that, it really makes a difference. And we've done that with various teams, and we're pretty good at that, I think, in GoCardless. But Embed, because we're a bit of a smaller team within the sort of wider organization, I think we found it even easier to do that and to do it more effectively.
We've talked a lot about PSPs, and so I kind of want to just have a little bit of a focus on that area in detail. From your perspective, what challenges do payment services providers face when adding more payment methods and value-add features to then become a single payment solution for their merchants?
The core of that question is interesting, where there is a challenge on PSPs to add more payment mechanisms, and we're definitely seeing that. But at the same time, that's really hard to do. Different payment methods, different payment schemes are really different underneath this, behind the scenes when you lift the lid. We try and explain, for example, how bank debit, so things like direct debit in the UK or ACH in the US, work to say a PSP who's focused on cards. And some of it's baffling to them because it's, if you're coming from a card world, it's kind of mad. And a lot of the assumptions you make when you're building a PSP are very much linked to the first payment methods that you integrate, which for a lot of PSPs is cards. And so when they come to adding other methods, they find that fundamentally just things don't work. And they have to make all sorts of difficult architectural trade-offs, or do lots of big replatforming, all those sort of things. And the thinking behind Embed, the way Embed works, is kind of a reflection of the way we think about all of GoCardless products, which is this thing should just be super easy, all in one wrapper. You just take it off the shelf. It's a really easy to use API. One API to get access to all the different schemes that we offer. We handle things like refunds and chargebacks, all those kind of things in there. All the reconciliation reporting is done for you, and really you don't need to worry about it. I think there's probably, or there could be an assumption when you're serving other PSPs that these are very sophisticated companies who know lots about payments, and they want access to, a lot more of the sort of the detail, and they want to get into, really granular sort of control. And for some payment methods, they will, and to some extent they will. But actually, if you can just offer something that's really easy and quick for them to integrate, you make that decision, really easy. They can just go and, within a few weeks or a couple of months, just add in that payment method. Compared with the impact that it's going to have, it's sort of a no-brainer versus them having to really get into the detail and understand, all the detail of the way it works.
And you mentioned things around, sort of chargebacks and the fact that GoCardless kind of handles all of that. And can you talk about sort of the fraud aspect, from GoCardless's perspective? What role does that kind of like that anti-fraud piece play within the payment industry? And then, how does that then impact PSPs?
We recently did some research, actually, asking merchants about their relationships with PSPs, what they expect from PSPs, and what they value and what they don't. One of the things that came up really highly was helping protect the merchants from fraud. And actually, it's surprising the number of PSPs who don't have that many sophisticated fraud products. They just sort of, offer the payments and expect the merchant to sort of deal with the fraud separately. But it's clear that it's really important. And we've got a product called Protect Plus, which we offer directly. And we also offer it as part of Embed, so payment providers can integrate it. And this, hopefully helps them meet that merchant need where they want something that protects themselves against fraud, but also it's an additional revenue opportunity. So where there are a lot of different PSPs in the market and you're sort of seeing margins, be stretched, and everybody's trying to reduce payment costs because of, all the merchants are looking for cost savings, you can do things like add-on fraud products and sell those as kind of add-ons that help you protect your margin and to generate a bit more revenue.
Just overall, from an industry perspective, are there any sort of specific payment methods that are now gaining more popularity amongst, your customers, merchants? And then I suppose, how is GoCardless then leaning into that?
The big trend, and it's super timely actually, is around real-time payments.
Mm-hmm.
The reason I say it's super timely is because FedNow was launched literally yesterday in the US.
Yeah.
And this is, in the UK, we've had faster payments for much more than a decade now. So we sort of forget that this is maybe not the same everywhere in the world. A lot of countries don't have these kind of real-time rails like we do. And it's something like cards. Obviously, the verification is instant when you verify tap the card or put your PIN in or whatever. But actually, the money movement happens usually a few days later, and it can be sort of up to a week. So the introduction of these real-time methods actually is absolutely awesome for merchants, for obviously things like cash flow purposes, also for things like fraud. The money has moved instantly. that you've got it. You can see it there in your account, and for the certainty of having that money. And we're seeing these sort of methods pop up all over the place. So Pay2, for example, in Australia, which is sort of a triggered instant push payment. We've got faster payments in the UK, but we're looking at, there are new ways that you can trigger those payments. Obviously, open banking and PIS payments, but also variable recurring payments, which are sort of an ongoing, more direct debit-like pull of those instant payments. FedNow in the US. There's a bunch of others. Really, at GoCardless, we are very aware that we've built a lot of our success so far on more traditional bank debit methods, but we've always been sort of slightly annoyed by these limitations of them, and that's just the limitations in the banking system. So we're super excited that now we can get our hands on this next generation of these real-time payment methods. So as soon as they become available, we're jumping straight on them. So we offer Pay2 in Australia, for example. In the UK, we're one of the first PSPs to be working with NatWest on variable recurring payments. In fact, we took the first live payment with them. We're jumping on FedNow in the US. We're just really, it's a strategic priority for us to move on all these areas as soon as they become available, because we think they're just much better at solving these merchant payment use cases.
You mentioned about FedNow, and it's almost shocking to think that the States hasn't had some sort of their own version of faster payments when we've had it for 10 years. And I think I sort of think I'm most interested to see is what impact that's going to have on Venmo in the US, because it's such a big product over there, because is the only way to fundamentally transfer sums of money very quickly to another party. And it's not really a thing over here, because if you've got to even if it's just after a meal or whatever it is, hey, can you just transfer me 20 quid? It's not a major issue. You press send, it will arrive there in mere moments. In the US, it's like, that's an actual genuine pay point. It's quite shocking, actually, I'd say.
Yeah, it's mad. Yeah, the US is kind of that weird, like a bizarre, sort of confusing, like in some ways, obviously they are, so advanced, their capital markets and things are, sort of really, really some of the best in the world. But at the same time, they have, thousands of tiny banks with sort of aging infrastructure. All these sort of regional banks, and that whole world is generally, a lot of them are kind of behind what we see in Europe and elsewhere in the world. And then just the underlying mechanisms, as you say, the fact they don't have real-time payments baffles us in the UK, certainly in Europe. And yes, you get this sort of secondary layer of players on top. Something like Venmo, I guess, will be pretty hard to displace, because they've got, the network effects, they've got the brand. I imagine the UX of Venmo for a long time will be better than some of the UX that sort of sits on top of FedNow. But you also may see, something like Venmo just using FedNow as an underlying mechanism and finding a way that they can just transfer to doing that.
You touched upon sort of UX, and that's something that we haven't kind of spoken about on the podcast today. And I'd be interested to kind of like dig a little bit deeper into, I suppose, that area of kind of your role and remit, really. And I suppose your approach when rolling out products, how you go about kind of measuring user adoption, impact of UX on that, and then testing to see then kind of what reduces friction points for your users. So it'd be great to hear kind of like how you tend to sort of tackle that, or, that particular challenge.
We're super conscious that payments are absolutely essential to the running of, the businesses of our customers. They're literally sort of the lifeblood of those businesses. So we're never going to do anything too crazy or dangerous or experimental where we stand a risk of reducing the conversion of the checkout flow of one of our merchants, right? Because if you reduce that even by a few percentage points, that can have huge impacts on the end profit of merchants. So we always want to sort of bear that in mind whenever we're thinking about experimentation. Generally, therefore, we do a lot of working with small select groups of merchants to sort of put them into pilot programs, into beta programs, where we think we've got something that matches that segment's needs, and we think it's going to be particularly good for their customers. And if they opt in, we say, great, we want to share this with you. We're very open and communicative about what the potential downsides could be. So we'll try this out, but we'll do it in a controlled way. It could have this negative impact, say, on your experience, and sort of work with them very closely on that, rather than, for example, we're not just going to go and turn something on for a random set of our users without sort of telling them or doing anything without being aware. It's always tricky in B2B. Obviously, sort of the number of data points you've got is reduced. With B2C, you've got a lot more users. If you're testing, say, conversion on a flow, you can get statistically significant results a lot more easily. So that's always a bit of a challenge. And there are ways around that. You can use, Bayesian techniques and those kind of things, if you're familiar with those. But it does come a bit more down to the qualitative, talking to merchants, interviewing them, and making decisions that way. You can't always make things, you can't A/B test your way to success necessarily on everything. maybe the final thing is we've definitely made a bit of a shift in the last sort of couple of years, where we've now got a few teams explicitly focusing on growth and proper product growth, where in our younger years we didn't have that. And I think I haven't worked on those teams, but having sort of seen them from a bit of a distance, I've been really impressed with the way that they've improved the way we can run experiments and the way they can bring together people from different parts of the organization to remove friction and to improve the way the product works. Because a lot of the time, that's the kind of some of the things you're up against. We want to say remove this bit of the onboarding flow, but actually that's needed for these reasons. But can we resolve those compliance reasons through another way? Bringing together those different people to sort of solve things particularly hard. So they've been really good at that. I can maybe recommend all of them actually to come on. They could they give a really, really good talk through it.
Yeah, absolutely. Please do. I think it kind of leaves us with, what does the future hold for GoCardless and kind of, what's next for you?
I'm going to sort of answer this maybe as a combination of what the trends are that are going to continue and what GoCardless is going to do about those. So the first one is around embedded payments, and people talk about embedded payments a lot, but we are real believers in it. We think it's going to continue to grow for all the reasons we've mentioned before, and lots of others too. And we obviously want to continue riding that wave with GoCardless Embed and with some other products we've got coming up. Secondly, open banking. We've talked about it a little bit, but open banking is really important to us at GoCardless. We believe that for lots of different merchant use cases, it really is an awesome way to collect payments. And we're doing a lot to kind of look at ways that we can combine open banking with traditional bank debit to make verified mandates product, for example, or to collect the first payment instantly using PIS, and then the follow-up payments using bank debit, direct debit, and those kind of things. So we're going to continue looking at that area, looking at ways that we can use those methods to best meet merchant needs. As I kind of mentioned earlier on the looking at the real-time payments, we can continue trying to be right there, integrating these different improvements in the underlying rails as and when they're released, so that we're right on there, immediately bringing it as value to our customers.
So before I let you go, let's take you through our quick fire round. What podcasts are you listening to at the moment?
I'll give two, one work-related, one not work-related. The work-related one is Lenny's podcast, which you may or may not have heard of, but follow up from the newsletter. Obviously, really hugely popular in product management, and he actually sort of goes beyond product management now. So really enjoying that, and there's always really good content, really high quality. And then the non-work one is one that I discovered a bit more recently, but it's been around for a while, called 20,000 Hertz. It's a bit of an eclectic mix of interesting stories about sound and certain sounds throughout history. And I love those kind of podcasts that just bring stories to you that you never would have thought about knowing otherwise.
Other than GoCardless, what's your favorite fintech brand, product, or app?
So I think if I had to use a favorite, it's quite it's a company that's been around for quite a long while now, and actually it's a part of GoCardless, but Wise is still just an awesome platform, and I still find it amazing how valuable it is, and how often I find myself using it to send money to people or to convert money or use their card. It's still just an excellently put together product and really solves a great problem.
What are you currently reading, or any books that you would recommend?
At the moment, actually, I'm reading The Innovator's Dilemma, which I feel like I definitely should have read by now, but I've only just got around to it. I bought a big stack of sort of those books last year that I feel like I should have got to. And I finally got to it. If I was going to recommend one other, it's one called The Information, which it's quite long and it's quite dense. And if you're a bit of a nerd like me, and particularly into computer science, it's really fascinating. But it's a history of information throughout sort of human time, I suppose, in different forms, and how that leads on to logic and computer science, and just forms this sort of wonderful narrative. But it's quite a big one. It's quite a tome. So you need to put some time aside to get through it.
And what's perhaps one thing that I haven't asked that I maybe should have?
I'm going to sort of toe the company line here and say that you should have asked about why bank payments are so great. And the answer to that would have been price. They are, because there are fewer intermediaries, unlike something like cards, the price is generally a lot lower. Success, they naturally just have much higher success rates. Again, with all the intermediaries in card payments, you quite often get declines and failures for random reasons. You don't get that with bank payments. And thirdly, churn. They just have much lower inherent churn. Your bank account doesn't expire in the way your card does, so you have that friction of having to update your card details with all the different places you use it. So I'm going to say that.
Amazing. Perfect. Well, perfect place to end. Ben, thank you very much for your time today. Thank you much for joining us on the podcast.
Thank you.
The FML podcast is brought to you by Growth Gorilla. To find out how our marketing growth experts can boost your fintech's growth, head to growthgorilla.co.uk and make sure to search for the FML podcast in Apple Podcasts, Spotify, or anywhere else podcasts are found. Don't forget to click follow to ensure you don't miss any future episodes. On behalf of the team here at Growth Gorilla, thanks for listening.